Welcome to this week's Forex forecast for the week ending March 10th, 2023. My name is Justin Bennett with Daily Price Action, and in today's forecast, we are going to talk about the euro, the pound, the dollar versus the yen, the Australian dollar, and also gold. Now, before we get started, if you have not grabbed your copy of the free swing trading course that I put out, be sure to check the description in this video here on YouTube. There will be a link to it, or if you're on the website, just click that free course link at the top of the website and it will direct you on how to gain access. All right, so with that said, let's go ahead and jump right into it. Looking here at the EURUSD daily time frame. So you can see that looking at the broader picture for this market, you can see where the euro has moved within this broader ascending channel ever since back here in October. All right, now at the moment, we have not seen the euro come down here and test this level right around 1.048. So this is going to be a big level if we do see it tested in the coming days. However, there is also a short-term trend line off of this low from back here, which we saw retested last week. Now, the more immediate thing I'm watching for the euro is going to be this level, this horizontal level right here at 1.067. So this is a level I've mentioned recently. You can see that we've got all of these lows back here, and last week tested it. However, the market was unable to close the day above. So you can see that this is going to be our pivot for the euro over the next 24 to 48 hours. Now, the market is trading above it right now. However, as you guys know, it is going to take a daily close above this to flip it to support. So if we get that, we're looking at a potential move up here toward 1.76. That would be the next key level for the EURUSD. And alternatively, if it closes below today, this level stays intact as resistance. Okay, so as of right now, because we have not seen a daily close above 1.067, technically, this is still resistance. All right, I have to stress that a daily close above this is required to flip this level to support. All right, so get above that. We're looking at a potential move up here toward about 1.076, and above that we have 1.085. Now this, if we see it in the coming days and weeks, this is going to be a big area for the EURUSD, and that's because it has been a pivot for the pair, but also because this is going to be what's called the golden pocket. So if we draw our fibs down, you can see that we've got this area right here between the 0.68 and the 0.65 fib. You can see that this is our golden pocket, a very significant area where markets do love to test that area in reverse. So keep an eye on this if we do see the EURUSD reclaim this area right here around 1.067, and then also this level up here around 1.076. Now, alternatively, if we see the euro rotate lower from this area, keep an eye on this trend line, but specifically 1.048. That's going to be the big one. I think if we see that break, then the euro could be in some trouble. However, as long as that holds, you do have to respect the uptrend that has been intact now for the last 6 months or so. So next up, we have the British pound, which is getting really interesting here. It is very sideways. I do have to point that out first and foremost. So I think anybody trading this right now, unless you're just playing the range, you've got to be really careful because it's a lot easier to get chopped up in this kind of price action. But over the coming days, we could have a setup here for the pound where you can see we've got this trend line off of these lows from back here. So the closing price on this candle, a low right here, the low back in this area, and then also this one right here. Okay. So basically we've got this area, this confluence of support down here, which is also the range support that we've looked at. So basically for the last few months, the pound has been moving within this broader sideways range that we've looked at. Okay, so support down here at 1.1915 and resistance up there at 1.2445. All right, so you combine this trend line down here with that horizontal, and you got a confluence of support right down here, right around 1.19. And we also have a short-term trend line off of this high from up here. Okay, so you can see that from this high, we've got these highs through here. We've got this one, this one. So that means that this level right around 1.2080 this week is going to be resistance for the pound. Now, if we start to see that break out, then the next stop for bulls is going to be 1.218. So this up here, you can see this has been a pivot for this market over the past couple of months. And furthermore, 1.218 is the mid-range of this broader range for the pound. All right, so essentially this level right here is right in the middle of that broader range. All right, so if we do see the pound break above this level up here and also get above the mid-range, okay, we could see a run at the top of this range right around 1.2445. But keep in mind too that we could also see a breakdown from the pound below this area, all All right, so daily close below this, we're looking at 1.1635, this high back here, and also potentially 1.14. This is the level I talked about last week. This is the March 2020 low, and it's also going to be the objective on a break below this range support down here. Okay, so basically the height of this range, if you take the height of this and measure lower from a potential breakout point, you get 1.14. Now, that doesn't mean that the pound will break down, but it would be the target if we do get that break lower. Now, keep in mind too, that we need a daily close either below this area here or above this level up here, and also that mid-range to open up the range resistance. Okay, so as of right now, the pound is very sideways between support and resistance. So again, I don't think that, trading this right now is a good idea, but once we get that breakout, this could become a very lucrative idea in the coming days. So the dollar versus the Japanese yen, we talked about this one at length back here when it was trading within this descending channel. So you can see that we had this perfect descending channel with some really key horizontal levels along the way. Now, we got the breakout from this channel right here on February 3rd. So you can see this candle broke out. We got the retest of this horizontal level over several days. And since that time, this has been a really nice move from the dollar yen. Now, you've got to be a little bit careful though, if you are still in a long position here, because you can see where we have a slight rising wedge that is formed. And this did break down on Friday. We're seeing a little bit more weakness today on that high. But right now, like a lot of other markets, the dollar yen is still very sideways. Okay, so basically for this market, you've got to keep an eye on 138 as a potential. Okay, as long as it's above 134.40, you have to, take this area up here and say, okay, there is the potential that we get a move up here because we have not seen that tested yet. But at the same time, if we see the dollar yen come down here and test this level, close below it, okay, 134.40, that's going to be the level to hold for bulls. If we see the dollar yen close below that this week, then we're looking at 132.90 and potentially lower. All right, so keep an eye on this one. As of right now, like a lot of markets, I don't think there's an opportunity right now. But if we do get the retest up here, 138, that could be a potential short. Or if we get the retest down here and the close below 134.40, then that could open up lower targets. And obviously below 132.90, if we were to get it, then we're looking at this area, this key pivot down here right around 130.70. Okay, so that would come into play only if we get the close below this here, 134.40 and also 132.90. But as of right now, not a whole lot to do here until we get some resolution out of this current range. So the Australian dollar worked out really well for us recently. You guys will remember that we looked at this channel back here when the market was breaking down. So I mentioned this in Discord right here on this breakdown. I also talked about it in the weekly forecast right after this candle. So we had a bullish looking candle right there at 68.70. So this was our key horizontal. And you can see where we got this bullish looking candle. Now, in that forecast, I said that I did not like this candle because it occurred in sideways action and also occurred on a Friday. Furthermore, the Australian dollar was holding below the bottom of this channel at the time. All right. And what you'll notice is the very next week, okay, on Monday, we got a retest right here at 69.20. And that was our short opportunity. Now, the second chance short opportunity came on a close below 687 right here on this candle. All right, so we've had the move lower. We got the retest of the very top of this range from back here. So all of these are going to be supports for the Australian dollar over the coming weeks, just because we do have so many lows in this area. Now, looking more at the immediate price action, you can see that I mentioned this to members in Discord last week, but you can see where on the 4-hour time frame, we do have a potential breakout from this trend line. So off of this high, we have the closing prices through here, the 4-hour closing prices, more closing prices through this area, this high, and then we had the breakout. Okay, this candle broke out, this one retested, same thing today. So no real follow through from this market just yet. Like a lot of markets, the Australian dollar is just sideways. So you do have to be careful with this one right now. But I also think that as long as the market is above the support down here, you have to at least assume that there is the potential for that move back towards 687. Because remember, this is our big daily level up here, 687. If you look on the daily time frame, this is a very significant level that has yet to be tested as new resistance. Okay, we saw the breakdown on this candle, but we never did get a retest of that as new resistance. All right, so maybe something like this back here, you can see how sideways the market tends to get at these support levels. So right now, very sideways, but you do have to entertain the possibility of that move back towards 687 for a retest as new support. Alternatively, if we start to break down, especially back below this trend line on the 4-hour, then we're probably looking at a move down here toward one of these lower supports. But I really don't think there's a short there just because the risk to reward is not worth it. And last up, we have gold, or XAUUSD, which I love the weekly time frame here. You can see just how well the market has respected these levels on the weekly time frame. So this is what the market is coming off of right now. So right around 1800, right around 1807 or so. This is the level I've had on my chart now for weeks, and it's one that I pointed out during this breakdown. So, we caught the breakdown in Discord back here from this candle on the daily time frame. And, right now the market is kind of trading right between this range. So basically, 1807 is going to be support, and this area up here, right around 1875, 1876, that's going to be your resistance. So as of right now, I don't think that there's really an opportunity here. Potentially, if we were to see a rotation lower into this area down here, all right, so right around this pivot, which we kind of saw today, but not quite, not all the way down there, somewhere around like 1846 maybe, that could be a potential long. Just keep in mind that we could also see the market kind of punch through that a little bit, take out some stops before the move higher. But basically, like I said, right now the market is trading between those two significant levels between 1807 and 1876. So as of right now, I think that looking for longs, as long as the market is above this level right here, okay, above these highs, I think that looking for longs is the way to go here on gold. But just be careful holding it too long past 1876 because, again, looking at the weekly time frame, that is going to be a very significant test for gold, given the fact that this has been in play ever since late 2021. All right, so that is going to be a major test for this market if we do see it tested here in the coming days. All right, so that's it for today's video. If you found it helpful, be sure to subscribe to the channel and smash that like button. And don't forget to head over to the website and grab your free copy of the swing trading course. You'll get instant access to it, and it is 100% free. All right, I hope this video helped. Trade well out there this week, and I will talk to you again next week.